months because of base effects. I think we don't want to pay too much attention to that because the Fed certainly isn't going to care that much and start to raise interest rates in anticipation of much higher inflation. But there is going to be that spike as last March and last April roll off, and that could get even more attention to the issue of inflation. There's so much slack still in the U.S. economy. We have a 6.7% unemployment rate. That's almost double where we were a year ago, and we weren't getting inflation a year ago either. So the notion that we're about to get this sort of huge uptick in wages that feeds through into price increases, I think we're a few years away from that.
Brian, I want to ask you to pull out your calculator on an Apple Watch right now to calculate this, but our Sam Rowe wrote in our morning brief newsletter this morning that the stock market could double by 2040. That's really essentially almost 10 years from the worst of the health pandemic. Is that realistic? I would even make the argument, do you think that's conservative? Look where companies are going to come out of the pandemic, much more lean, much more efficient. And to me, that really gets a setup here, some really powerful earnings gains, at least the next 10 years.
I think that's probably right with respect to earnings. I think we're going to see the ability of companies to become even more productive. I think some legislation that we could see this year, especially later in the year with respect to public investment infrastructure, could also help with some of that. I don't think the market is valued to take off in terms of price increases at any kind of a historic rate over the next 10 years. The best predictor of what the market does over a 10-year period is how it's valued today. So if you're looking at things like cyclically adjusted PE, 12-month forward PE, these are all extremely high relative to normal or average. And so over the last 10 years, investors have earned about 15% per year owning the S&P 500 on average. I think over the next 10 years, we'd be lucky to see half that. And now 7.5% returns per year is not a disaster by any means, but investors who are assuming that the last 10 years are going to look like the next 10, I think have to look at where things were valued 10 years ago versus today. We may be in good shape in terms of earnings outlook, but I think that is probably incorporated into a lot of the prices of at least of the larger cap stocks that we see.
So, Amy, on that note, I want to bring you back to the idea of retail participation in this market, and whether, particularly when we're talking about options, whether retail investors know and understand what they are doing, as we see, extremely high open interest here on the part of retail investors, and the implications for that for the long-term ability of the market to continue to rally, as Brian and Brian were just discussing.
Yeah, it's a good question, and there's
Stock market opens in 2 minutes.
One is there are now these forums where people can
I'm just setting everything
discuss
up.
options, discuss derivatives, and some of the things that have been discussed have surprised me in terms of the level of savviness. So, for instance, talking about a gamma squeeze, which is a technical dynamic that happens to a dealer in certain situations on options. That's something where I've been doing this for 17 years and, has usually been relatively niche. And you're actually seeing this in a broader forum being discussed. So I find that overall interesting. But the second part is, there is a distinction to be made between a lot of the activity we're seeing right now, specifically from retail, is in smaller cap names. It's also in smaller dollar names. And some of it is in, off exchange or digital assets. And so what actually happens, because the overall stock markets like S&P and the NASDAQ are so heavily weighted, as we discussed before, to FANG and FANGMAN, is it is actually possible to continue to have retail exuberance at the same time that indices like those continue to face headwinds, because the market meat has become so much of these handful
The market
of
is
companies
open,
so that,
guys.
you can
The
continue
stock
to have
market
retail
is
call buying
open.
on
Let's
these
see what
smaller
we got.
names and still see, maybe the overall indices kind of sell off a little like we saw last week.
Yeah, and Amy, I think that just speaks to the structure of the market has changed in ways that we're only beginning to kind of grasp and see.
I'm gonna turn down the volume for you guys. What's up, everybody? The stock market is open. Oh,
It's Brian, Nick with Nuveen. Thank you
some of
both
y'all
so
want to hear
much
the opening
for
bell.
joining the show this morning. All right, as you see there, that is the opening bell live from the floor of the new.
All right, what's up, everybody? Stock market's finally open. Haven't done one of these videos in a while, but I'm back doing one of these videos. Let's see what we have. Adobe. See, a lot of these plays, if you guys are in the group, I posted about these plays Friday before or last week. So hopefully some of you guys got into some of these plays. Adobe, I'm waiting on this one to actually do something. This one might take a little bit more patience. AMC, this was a risky play I mentioned in my this one was a risky play, but I ended up doing it anyway. And it worked out in my favor. Let's see how much percent did I gain from this. %25%. That's crazy, right? I'm up 25% in this position right here. I might sell it and get back in it. I don't know. I don't really like the way it looks, even though I should just keep it for the long run. I might keep it for the long run, but I might sell it. I don't know. People are loading in on this. I just got to keep a close eye on this one. But as I said before, I'm up 25%. That's crazy, man. Alibaba. If you got into this one, you should be looking at daylight as well. Another good play I made in this one. Let's see if I can pull this thing over here. There we go. So this one, I'm up 14%. This is just so easy, man. What's this right here? My science group. I'm up 10% on this one. This is a slow mover right here. But I'm just waiting this one out with patience. Facebook. Of course, Facebook's going to come up. Some of these just take patience. I love seeing that gap. Makes me feel good. See, the thing is, even though the thing about these percentages is I got into these on Friday and you're like already up. You know what I mean? Friday, yo. Friday. Like, look, this one I got into on Friday, and that's today. It gapped down. Waiting on it to shoot up. Let's see, anything else pull back? Twitter. I'm looking close at this one right here. I really want to get into Twitter. This one looks really good. I just gotta be patient. If you guys got any questions, feel free to ask them in the comments. By the way, I'm gonna turn the volume back up so you guys can hear the TV. Market up. Market's always up, man. What's up, Kiki the Don? Hey, I remember when I told you to get in this the other day? I told you to get in this one right here. I'm up 25%. Remember this AMC? I'm up. I'm up on everything. I'm up on Adobe. I'm up on AMC. I'm up 14% on Alibaba. Let me see. I'm up. Oh, I'm gonna give you the numbers, man. I'm gonna be straightforward with you right here. I'm gonna show you how I feel today. See, this one right here is a new trade. So, hold on. I'll just do it like this. Let me show you how I look. Let me show you how I look right here, all right? Let me show you how I look right now. See, this is why I don't be trying to work for nobody right here. So this one right here, this a new one. So on this one, I'm up 0.24%. I only been in this one for, I don't even know, like a day. And I'm up 0.24%. Not bad. This one, oh, well, this one's dropping. It's going to pull back up. Oh, man, I think I deleted the thing. Hold on. There we go. I was up around 25%. It's gonna go back up because people still loading in. The market is open. Alibaba, what's this one looking like? Up 14%. See what I'm saying? Oh man, this one I was up. This one's I'm up 9.64%. DLR, what's this one looking like? Hold on, let me move this down a little bit. See, this one got some room to go. This one I'm up 1.54%. Facebook, let's see what Facebook looking like. $1.5%. Come on, man. I'm good. I'm good. I'm straight. I don't care what nobody say. Y'all say what y'all want. I'm good. I'm good right now. Like, why wake up every day to go to work? It don't take that long to do this. I'm trying to find something else to use, man. Let's see, Twitter. Yeah, so this one, see, Twitter looks so good right now, man. Like, this is the one I want to get in. This is a stock I really want to get in because why wake up and go to work? Exactly. Why wake up? Oh man, that actually looked like it might come up. Hold on. Why wake up and go to work, man? Damn, that might actually come up right there. I should buy something, but that's an all-time high though. Hold on. Nah, hold on. Hey, Twitter is where you want to be because I need money to invest and go on vacay. Hey, keep your close eye on this, Kiki. When I say get into Twitter, don't ask me why, don't ask me when, don't ask me who. Stop everything that you're doing and get in. Because, like, I'm trying to get in this one a little further down the line. But pretend I got in right here. Pretend I got in right here. Hold on. Pretend I got in right here, right? And just to take that up to that is 24%. And that's if I get in right here. And I ain't getting in right here. That's the thing. I'm getting down a little lower. I'm greedy like that. I'm greedy like that. So when Twitter comes back down, I'm getting in. That right there is 24%. So for y'all who new to the markets or who ain't good at math, if you put $100 into this, you'll make $24. I screenshot my day change to you. I ain't look at mine yet. Hold on. Let me see. Will you send it to me on Facebook? Let me check. Oh, you still working on it? Yeah. And that alone right here is 24%. I'm getting in on this one right here. I'm just patiently waiting to see what happens. I know earnings play is coming for Twitter and all of that, but I ain't really too worried about that. I just need to take my time and figure out where's the perfect entry at for Twitter. Because right now, this is looking real good for me. Like I said, if you take just between these two lines right here is 24%. That's a lot of money right there, man. That's a lot of money. 24% just to go from here to here. Ooh. I will load right here, but I'm gonna wait, man. It's just it just came from an all-time high, so I gotta be patient. I need a good setup. Hold on, let me zoom in just a little bit more. See if I see something else. That look good right here. I like another spot right there. Is there anything else that I see? It does. That just looks so juicy, man. Like, I just really hope this pushes down right here. Because if this push down to somewhere in this area, I'm going to load up. As soon as I see that number, let me see. Hold on. I need a target that I need to hit. Hey, as soon as I see it somewhere around this area, 40, I want to say 41, I'm loading a boat. I'm talking about as soon as I click buy, all aboard, I'm loading a boat. I ain't wasting no time. I ain't waiting on nobody. I ain't even gonna get that greedy. I'm gonna get it right here. Cause this is COVID, so I gotta take this out right here. I can't look at that. I'm gonna look straight right here. So for you guys who don't know, I don't look at this. This is COVID right here. COVID did this. This is unlikely to happen again. That's unlikely unless the president do something crazy. The current president, that is, but I doubt it. So about here, I think 40. What price is this? 42. I'm loading the boat. I am loading the boat. Hey, I'm up around the same months as you. Something like that. I'm loading the boat. I gotta keep my eye on this. Even though I really want to get in right here. Like, I ain't gonna lie. I might just get in right here and get in again at 42. I'm thinking about it. Cause man, cause this just looks so juicy right here, man. Like, I just might just get in right here and then get in again at 42. We're gonna see. Cause this is a good spot right here. It ain't the best. What is a good spot? I might just have to load the boat, man. Let's see, what do I have? I might just gotta load the boat right now. That's my next move, Twitter. I really hope it gets down to 42. I don't know if it will or not, though. Because it does look like it's struggling to pass this line right here. And that. I might just load up twice on this one. What's up, man? What's up, brother? What is this? The stock market, man. You know, I like to trade stocks. What's this right here? Earnings, but that don't count. This is earnings. Boom. Shot up during the earnings. This earnings about to come up again. And this one right here. Let me take this cross off. See, man. Well, it shot up, then shot down. So I guess same thing. Shot up, then shot down. What's this? February? I got time. I'm loading the boat on this Twitter right here. I'm about to buy this Twitter. Why not? I'm gonna sell one of my other stocks though. Is this like share market thing? Yeah, stock market. The stock market where you buy, sell, trade stocks. It's this is how you make money, man. I'm about to buy this right here at 45.04. Still dropping, baby. Come on, if I can get. Everybody loves Twitter, so and that's what the Trump made this drop like this. So why not buy the dip? Buy the dip. I'm fixing up my I'm trying to buy this real quick, guys. Give me a second. Y'all know how we do. We buy the dip. Buy the dip. I'm keeping a close eye on it. What's up, bro? Nah, it's fine, bro. I'm just trying to buy this real quick. Had to, man. See what price I get it in at. I'm gonna have to buy this a second time if it drops a little bit more. 44.94. What raid you when you gaming? All right, bro. I appreciate it, man. Oh, you talking about raid as in send me some followers, or raid as in raid my base on Rust? If this drops here at 42, I'm gonna buy some more. I like to put my money to work. Not. It's either you're gonna put your money to work, or you're gonna leave it inside the bank and get 1 penny every month. Trying to see if I need to sell anything. I might sell this one right here. Nah, I'll just hold it. So I'm gonna hold this right here. Like even though I say I want to come down a little bit more, I don't know, man. I just feel like it's gonna keep. I just feel like it's gonna come back up at this point. I just feel like it's gonna come up. Like even if it does come down some more, I'll just buy more. But it shouldn't go no lower than this line anyway. So I had to get this. Had to get this. I had to get this free money. 44.94. Let me go ahead on to remove this yellow line right here. The flip side is I'm already in profit, so hopefully it stays that way. Man, what happened? $44.94. Boom. There we go. I hate when that happens. There we go. Just gotta hang in there, buddy. Hang in there, old Twitter. I feel like I don't know if it's gonna. I just don't think it's gonna touch this part. I think this was only from the Trump ban, but we'll see. We'll see. Worst case scenario, I'll just buy more. It's not like the thing about the stock market, y'all, is if the price drop, it's a good thing. If the price go up, it's a good thing. If it drops, you buy more. If it goes up, then you make money. So it's good either way. Now, what you don't want it to do is stay in the same spot. That's what you don't want it to do. All right, guys, I'm gonna put the audio back on. If you guys got any questions, just post it in the chat.
Changes USAA. What you're made of, we're made for. It's never fun to say, oh, regulation or lawmakers are going to do this to make a company change, because ultimately the last 40 years of U.S. lawmaking has been about, acceding to corporate demands and saying, you know what, you're right. Business is the thing we need to take care of first. We'll worry about what's fair for our citizens. Second, I'm not sure that the appetite among voters, however, really remains that way. I think it's kind of mask off now. The 2017 tax cuts were pretty clear to most citizens, even those who did vote for Donald Trump, that people didn't care about you. They cared about big companies. I don't think people have forgotten that. I don't think they're going to forget that. And so I just don't think that we're going to get through the next couple of years with Google or Alphabet, I guess, Facebook, Amazon, operating the same way they do today. I just don't see the path forward for these businesses to continue to completely get away with whatever it is they want to get away with, and then explain it away and spin it, through their comms team, which is usually staffed mostly by lobbyists or former government officials. I just feel like that era is kind of coming to an end for these companies.
Miles, and you are. I'll just quickly add too. You're seeing the market, I think, start to distinguish between potential winners and losers. And you look at Facebook stock trading about 23 times forward earnings on a price to earnings multiple basis. That's almost in line with the broader market. And you talk to a lot of folks on Wall Street, and they're starting to lock in on Facebook, especially in light of what happened on the Capitol Hill. And maybe Facebook is the one over the next 4 years. Maybe, in fact, they are broken up. Maybe WhatsApp is spun off. Maybe Instagram is spun off. And then in turn, what does that create? You've just created two new competitors. I guess that would be part of the main targets of why these companies are split up. But essentially, you have two new competitors competing with ad dollars with Facebook. That's not a good place to be if you're Mark Zuckerberg and Facebook.
Yeah, I mean, I have to wonder, at some point we're going to turn, and I guess we've already started to integrate this question already, we're going to turn from how does the regulation look? Are they going to be broken up? What's going to happen with them? Is Congress going to be able to act? To, is the remedy going to be the right one for what we're trying to target? And I think that's going to be a big question as well. If we break up Facebook, is that going to achieve what we collectively want to achieve? Is it going to give them less control, or are each one of those entities just going to be as powerful? And I think that, unintended consequences are going to be a really important part of this discussion as we go forward, I think. So just one more thing that I want to mention on a totally different note, because it's something that we're also watching this morning, and that's the ongoing situation with Office Depot and the bid for it from Staples, which apparently the parent of ODP is now rebuffing this morning, Brian.
Yeah, my thoughts are on this deal were captured in a tweet I put out this morning with a whole bunch of emojis on Twitter. If you're Office Depot, take this money, run, wave goodbye, and to all the executives on that team, go get a new job, start a company, do a SPAC. Because if you look at the financials of Office Depot over the past decade, their sales have absolutely melted away. And it's not just because Staples taking market share, Walmart's doing office supplies, Target's office supplies. I can get office supplies delivered in my house by 1 hour from Target. And you've seen Office Depot continue to shrink, and you've seen the margins essentially go down to nothing. So if you're Office Depot and somebody's willing to give you billions of dollars, take it. See you later. Go find a new gig.
And head on over to Twitter if you want to see how Brian distilled all of that in a bunch of emojis. All right, everybody, we're going to take a quick break. When we come back, we're going to be talking about Janet Yellen. She is set to testify before the Senate Finance Committee at the top of the 10 a.m. hour. We'll be right back.
All right, Chad, I just made a quick little come up. I bought Twitter. Hold on, let me go to my chart. All right, I bought Twitter at $44.94, and I just sold it at $45. Just make some quick cash real quick. But I'm gonna wait for this to pull down to, like I said, my first mark. 40. I don't know where I want this to come to. But I made a quick little come up though. Oh man, nothing wrong with a little bit of free money.
It is 10 a.m. on Tuesday, January 19th. This is Yahoo Finance Live. I'm Julie Hyman, along with Miles Udland and Brian Sozzi. Let's take a look at stocks right here. We are seeing a rally go on here in the U.S. as we've got.
Good thing I sold it. I sold it at the right time.
Stocks. We've got the Nasdaq
The right
leading
time.
gains today.
Okay.
It's up about 0.75%.
It's okay though. It's still in a good spot, to be honest.
Secretary nominee Janet Yellen testifies before the Senate Finance Committee. That's set to begin any moment. She's going to make a push for Joe.
I don't know. I mean, sometimes I like to just get greedy with it, you know? It's in a good spot. Don't get me wrong. It's in a real good spot. Because it's like right on top of the SMA line, but it's okay. I'm going to wait. I'm just going to be patient and wait it out. I'm going to wait it out. Try to get something a little bit better. I mean, it really is on a good spot. Like, even if you do the trend lines and you connect it, boom, boom. I mean, I guess it's right on the outside of it, but we'll see. I'm patiently wait it out.
Yeah, I think that's right, Julie. So, you know, society's expectations of business and of business leaders, CEOs, is really fundamentally changing. That's been happening over several years. Last year, it accelerated rapidly because of COVID and concerns about safety and health. And of course, with George Floyd, it really focused on racial equity. What we've done just last week is a flash poll with our partners at Harris to find out what do people think about corporations' role on, in particular, politics right now and their involvement in what happened at the Capitol, but also whether companies should be, how they should be thinking about their political campaign contributions to their PAC. And what's interesting, as you can see in the graphic there are some areas of still very big disagreement among Republicans and Democrats, especially. For example, you know, denouncing actions or stopping campaign contributions or political contributions to politicians that opposed Biden's certification. Big split between Republicans and Democrats there. However, we found some real areas of agreement. Much more interest in disclosure and transparency around campaign contributions overall. I think we found a majority wanted to see, felt that donations as they were, you know, as it currently happens, is really harmful to democracy, and wanted to see a lot more transparency and a lot more disclosure. Republicans, Democrats agreed 76%, 82% on that. So that was a big area. We also found a lot of agreement on stopping misinformation and sort of undermining, you know, access to reliable information, spreading of falsehoods, things like that. Again, surprising agreement between Republicans and Democrats. 75% overall agreed, but 68% Republicans, 86% of Democrats. So we found major sort of areas of agreement, and the biggest area is around pausing and reassessing political campaign contributions. We've seen many companies do that. JP Morgan, Citi, AT&T, Verizon, Airbnb, they've all paused. And I think there's widespread support for that. until we can figure out what more companies could and should be doing. But I think that the real takeaway here is there's going to be a lot more attention focused on data, transparency, and disclosure on what companies are actually doing.
Martin, you write extensively that this is the year stakeholder capitalism gets real. What steps would you like to see from the Biden administration to help achieve that comment?
Well, I wrote that because I think last year we've seen a lot of positioning, and of course in 2019 we saw the Business Roundtable. Now almost 200 American CEOs, our largest companies, commit to stakeholder value creation. And I think people want to see companies walk the talk. And so part of what I expect to see is a greater emphasis on disclosure, on data, the availability of data to the market, so that investors who are flooding money into ESG right now are able to see, okay, well, what are companies actually doing? Who's actually walking the talk? And part of that is around, there's going to be a role for the SEC. There's going to be a role for companies to require standardized ESG reporting on key issues. So I think we'll see a big push there, a lot of support for that. Biden himself has come out and said, I support stakeholder capitalism. So we'll see what that really means, and I think this is the year where we're going to see a lot more, all that money flooding into ESG is going to say, okay, is this actually making a difference? And how do I know? The market can't function without good, reliable, standard information, as we all know. And that's not happening in ESG right now. So that needs to happen if this space is going to continue to grow.
And Martin, I guess related to that too, and this is sort of the $64,000 question, is because most money today that's coming into the market is through a passively managed kind of strategy. Even though it's ESG, it's still, you don't have shareholders in mass, kind of saying, I want to vote up and down on all these different proposals. I'll just trust Glass Lewis and so on and so forth. How do you see that playing out over the next 5 or 10 years if we are to believe this money will really keep management teams, feet to the fire here? Because as you note, it is kind of time to actually walk the walk here. But it's such an odd way, given the way the market is now structured in terms of ownership stakes and funds and so on and so forth.
You are 100% right. That is one of the biggest questions facing the whole ESG space right now. I think a couple of things, when you look back over the history of this space, it was about divestment, it was about investor activism and boycotting companies, boycotting certain sectors. And we've seen that with climate change more recently. I think to your point, what we'll see is a much more emphasis on engagement by those owners. The asset owners themselves, the pension funds, we'll see a lot more retail pressure put on asset managers to say, okay, my money's in. I want to know what difference it's actually making. I'm not looking to divest. I want engagement. So I think the engagement, proxy voting, direct engagement by investors with companies is going to be the area where a lot of that sort of change happens. And, companies will need to staff up on that. I expect asset managers will need to really focus on much greater transparency on what they're doing around that engagement process. How are they voting their proxies? Is that consistent with what they're saying externally, with their strategies around purpose and climate and social impact and racial equity? So that's what I think will happen, and much greater push ultimately for accountability.
Martin, finally, I want to turn back just quickly to the Biden administration as well, because what we saw characterized the last 4 years was a shift in this direction that you're talking about, in part because the Trump administration was pulling back on a lot of these priorities of consumers, on climate change, on ESG, et cetera. Now that we're switching to an administration that is going to prioritize these issues, do you see corporations maybe backing off or the balance shifting a little bit more?
I think to me, it can't be a political football. It needs to be about performance at the end of the day. This is just better business. So I think the onus is on those business leaders and investment leaders to say, okay, how is this tying back to growing the pie? How is this tying back to better returns, better competitive performance? If I'm a CFO of a large company, I've got a whole bunch of stakeholder priorities, including, of course, my shareholders who are crucial. Where do I put a dollar down to get the greatest bang for my buck? So I think it's not actually, Julie, if I hope it's not anyway, about politics. I just think it's a better way to drive economic growth. I mean, we need that right now in this country. We need the economy to work for more people. Most importantly, we need more and more people in America to feel like the system is working for them. If you don't feel like that it's working for you, bad things happen. So I think this is all about economic growth and companies saying, okay, what actually is working here? How is this really relates to my competitive performance, my performance in the marketplace, and much more discipline, data, research, and analysis around that.
Yeah, well, definitely we're hearing a lot more talk on this issue. As you say, accountability and transparency are going to be key going forward on these points. Martin Whitaker, always good to get some time with you, Just Capital CEO. Thanks, Martin.
Thank you.
I want to turn back to the markets now and to Janet Yellen, who is set to begin her testimony before the Senate Finance Committee any moment. She, in her statement that she released, already talked about acting big in terms of stimulus to support the U.S. economy. I want to bring in Rob Arnott now. He is founder and chairman of Research Affiliates. Rob, it's great to see you. So as we hear this talk about stimulus, that $1.9 billion plan that the president-elect has proposed, what do you think continues to be the knock-on effect in the markets? It seems like as long as the taps are on, markets keep going up.
That sure seems to be the pattern. Words matter. Applying the word stimulus to spending large quantities of money on a fiscal basis that we don't already have, creating new money from the central bank, it all feels good. Stimulus, think of it as a little bit like heroin. I've heard that heroin feels good, but it doesn't do you a lot of good long term. The reduced spending from the lockdowns paired with the fiscal and monetary so-called stimulus pours money into the markets. There really is no alternative. With zero yields, you might as well go into stocks at any price. Retail is surging. Retail investors are surging in their activity, chasing the market darlings, creating bubbles. And when fiscal and monetary stimulus don't promote spending in the macro economy, it goes into Wall Street, not Main Street.
Rob, I want to stay on the retail side of the equation. It's certainly an interesting dynamic, not only because there's a global pandemic, tens of millions of people lost their job last year, but because it had been so long, really 15, 20 years since we'd seen retail participation en masse within the market. How does that change the character of the market in your view as we try to figure out what the next big trends are? I mean, having this kind of money in there has certainly changed the character of things at various points this year.
Well, retail investors, for the most part, certainly ample numbers of exceptions, aren't all that sophisticated. They buy based on narratives. They buy based on stories. Elon Musk is reshaping the way we travel, the way we get from place to place. He's reshaping the nature of the landscape for the auto industry and soon the trucking industry and space. And boy, he's got the talent to take over Google's book of business in search, Apple's book of business in creating technology, and social media companies like Facebook. He could supplant all of them. Okay, that's an interesting narrative. It doesn't have a lot of substance to it. But what you wind up with is retail investors chasing stories. We wrote a paper a couple of years ago in which we defined the term bubble in a fashion that can be used in real time, not years after the fact. Yes, we know there was a tech bubble in 2000. Okay, but at the time, could you have said this is a bubble? Yeah, our definition is actually really simple. One, you'd have to use implausible assumptions in a discounted cash flow model or some similar model for valuation. Implausible assumptions to justify today's price. Part two of the definition, the marginal buyer doesn't use those tools and doesn't care about them. So you look at Apple. Expensive, but is it a bubble? No. You can use aggressive assumptions. They don't have to be implausible assumptions to justify today's price. And there's lots of buyers who buy it based on that kind of analysis. Tesla, the marginal buyer does not care about valuation models. So bubbles are percolating galore across the markets, and that's part of the consequence of the massive fiscal and monetary stimulus we're seeing.
Rob, going back to your earlier analogy on your heroin analogy, I would argue, a lot of retail investors wake up in the morning, eat, sleep, and breathe Tesla throughout the trading session, and this has been going on for well over a year now. What pops that bubble? What's the trigger point a professional like you is looking for to say, you know what, the bubble, it's about to burst, and here are the trades that I put on to avert that plunge?
Well, here's the deal. Bubbles can persist longer and take markets further than you can possibly imagine. And so short selling a bubble is very dangerous. The old cliche about a market can remain irrational far longer than you can remain solvent. So short selling a bubble is really dangerous. But the catalyst question is an interesting one. Catalysts, by definition, take the market by surprise. Otherwise, there wouldn't be a catalyst. So the vast majority of investors don't see it coming. Now, the other thing that's interesting is after the fact, sometimes you can't even identify the bubble years later. What was the catalyst? What was the catalyst that burst the tech bubble in the year 2000? I have yet to hear a compelling story for why that bubble burst that would be strong enough to justify that market rolling over and the tech sector dying. The same thing will apply here. I could speculate on causes, possible causes of today's bubbles bursting, but the simple fact is it'll happen. Bubbles burst. And so the question is, do you want to be picking up nickels in front of a steamroller, or do you want to invest? If you want to buy Tesla. Have an exit strategy. Have a reason in mind in advance for what's going to cause you to sell. And the same thing applies to Bitcoin and other bubbly assets of today.
And Rob, my other question is, who does it take down with it, right? Obviously, we've had different kinds of bubbles over the decades. Some of them have been systemic. Some of them have the popping repercussions have been widespread, and some have not. So here, if you're looking at a Tesla, although it's a lot bigger than it used to be, or you're looking at a Bitcoin, or you're looking at SPACs, or you're looking at IPOs, or renewable energy, to take another area that we have seen valuations really go high. How systemic are those bubble pops going to be?
Well, one of my friends in the business is fond of saying that the role of the market is to inflict maximum pain on the maximum number of people from time to time. So the simple fact is that when bubbles burst, they have repercussions that affect lots and lots of investors. Any index investor has a large investment in Tesla now. Any institutional investor who has part of their money in indexes has a large chunk of their money in Tesla. And I'm using Tesla as an illustrative example. I don't mean to single it out. There's lots of bubbles percolating right now. But when you have Tesla trading for more than the entire rest of the auto industry, excluding companies that deals exclusively in electric vehicles, fully electric vehicles, those stocks, a lot of them have no sales and are priced at 100 billion market cap. Not a lot, several. And take those out of the picture, the folks who make 100 million cars a year, nearly, collectively are worth less than Tesla that made 400,000 cars a year the last couple of years. So what you're looking at is an extraordinary spread in valuations. Now, the other thing that's interesting is those automakers that are worth less collectively than Tesla make twice as many electric vehicles as Tesla does. Isn't that interesting? So you could buy all of the producers, the major company producers of electric vehicles, for a fraction what you pay for Tesla. So this is the nature of bubbles. Bubbles exist until they don't. When they burst, there's a lot of carnage. There's a lot of tears.
We will see who's crying when it finally happens. Rob Arnott, great to get some time with you. Thank you so much for joining us this morning, founder and chairman of Research Affiliates. Thanks, Rob.
Thanks for the invitation.
And as we've been talking about, Janet Yellen is set to begin testifying in just moments before the Senate Finance Committee. You see there, Senator Chuck Grassley still giving some opening comments there. But we continue to watch what's going on in stocks as well as what's going on in the bond market this morning as she prepares to testify and is expected to talk about going big when it comes to stimulus and aid for the economy. You see the 10-year yield right now, 1.11%. We'll be right back.
All right, welcome back to Yahoo Finance Live. Miles Udland here on this Tuesday morning. Let's take a look at the markets. We see a rally underway on Wall Street, moderating our gains somewhat, but we are still looking at all three majors higher to begin this trading week. NASDAQ had been up more than 1%. As we saw heading into break, Janet Yellen, nominee to be the next Treasury Secretary, is testifying in front of the Senate Finance Committee today. In her prepared remarks, Yellen talking about the need for the government to continue to go big as it relates to fiscal stimulus to aid the recovery as we try to claw our way out of the COVID-19 pandemic and the associated economic downturn. Just want to call out a couple areas of the market where we are seeing notable strength, notable in the form of record intraday highs. Yahoo Finance's Jared Blickery flagging these for us. Home builders, XHB is trading at a record intraday high. Also looking at IBB, that's the biotech ETF. That is hitting a record intraday high. Remember, not too long ago, concerns over drug pricing kind of dinged that, although it's going back several years now. And KWEB, which is the China Internet ETF, that is also trading at a record. So those are just some interesting pockets of strength within an overall solid day for the markets. Our last conversation with Rob Arnott certainly highlighting some of the more bubbly areas of the market, electric vehicles among them, and we have talked about that at length. Trending tickers here on Yahoo Finance today, of course, include NIO because it is another day ending in Y, and so we must celebrate Chinese electric vehicle company NIO, though that stock is under a little bit of pressure in today's, or it had been under pressure. Now it's back up 3% because that stock has to go up every day. Those like Tesla, that is basically the rule within this market. See, it's up over 1,000% within the last year. All right, a lot more coming up here on Yahoo Finance Live. On the other side of this break, we're back in just 2 minutes. All right, the fintech space has been red hot over the last year. One company just out raising a fresh round of funding is MX, raising $300 million at a $1.9 billion valuation. This is a Series C funding round. And the company's CEO, Ryan Caldwell, joins us now to discuss. Ryan, thanks so much for joining the program today. Let's just start with kind of maybe for our viewers who aren't as familiar with where you guys sit within, I guess we call it the fintech stack, if that's maybe a way to think about it, where you guys sit within that, and then sort of how this capital can kind of play out, your growth trajectory over the next couple of years.
Yeah, definitely. It's something that we're obviously very excited about. We're excited about the round. TPG came in and led it. Capital G participated as well in a significant way and both joined the board. And we had a group of incredible investors who followed on as well. So it's been exciting news for us. For MX, when people think about great raise, great valuation, what does MX do? The simplest way to put it is we power data-driven money experience. So for a lot of people, when they're thinking about all the different ways in which you can use financial data, it's hard to wrap your mind around how do you define that? And the term that's been used time and time again to describe MX is money experience, because it includes all the things from a fintech connecting to wanting to leverage data, connect to a bank account to simply move money or open up a simple robo-advising account or an automated savings account, all the way up to a $1 trillion plus bank leveraging data to understand the nature of their user and how they can help them in their financial lives. So it's the entire gamut of all those money experiences that fintechs and that banks are needing to provide today.
Ryan, you sold yourself short a little bit. You also have some other investors here that were in this round. Greycroft, Stevie Cohen's Point72. I mean, these are some heavy hitters. But as you take a step back here, what new experiences in banking do you think will emerge over the next few years and that you're helping to create from your technology?
Yeah, you bring up a really good point. The investors that were also participated are some of the most prominent investors in fintech. As you look at Greycroft and the companies that they've backed, obviously Point72, Coda, Canopy, Geodesic, these are all companies that have a very strong fintech focus, and they've backed some of the biggest names in fintech and in banking technology. So for us, I mean, it brought together a group of people who really understood the space and had a really strong thesis around what was possible and what could be done with the data. So when you think about, again, MX powering these data-driven money experiences, it's a complicated process to be able to get to all this data. It's to collect the data and then to be able to enhance it enough to be able to know how you can do analytics on it is often 90% of the problem of what a fintech is trying to solve, or what a bank really needs to do to provide that great end user experience. And fintechs and banks are faced with a choice. Do they go and try to do this on their own, or do they rely on a partner that can really extract 90% of the work because we're doing it at scale, and then be able to simply focus on that end experience, that money experience, using the data, having it being data driven by what MX provides. And we're seeing fintechs understand that this is the only way to really go and to scale their business, because they need to focus on all the data and analytics that come beyond what MX does, which is how do they look at that niche application. And banks aren't really built. They're so focused in their regulated environment, security, regulation, compliance, that it's often hard to be able to innovate at the pace that an MX can to give them those types of data options.
Well, and Ryan, it's Julie here. That brings me to the next option for banks, which is to acquire this kind of technology. But maybe that path just got a little harder with the Visa Plaid deal not happening, in part because of regulatory scrutiny. What does that say about how these strategic combinations maybe are going to work or not work going forward?
Well, so you bring up a really good point. So what's interesting with that particular acquisition and the DOJ getting involved is there's two takeaways. One of the takeaways is that you have Visa, who's an incredible company, great brand, but obviously is at a large size. So the DOJ has always been concerned around the size and the control that a company like Visa has. But to think that buying a company for $5.3 billion when you're approximately a $400 billion company, that's the step too far. That's when the DOJ really gets involved. I think it more underscores the significance of what's being done with data in this fintech space, and what's being done with data that banks are going to have to really rely on this data. So instead of it underscoring the strong position that Visa is in, even with the great company and the great brand that it is, it really underscored the position that the new entrants, the people who are coming in and understanding how to connect to this data and again enhance it. And MX is in the perfect position for that. We connect to approximately 4 times as many connections than any other provider of this type of data in the space. We actually have as customers 2,000. Most of the other people in the space won't really reference how many customers they'll have. They'll just reference how many banks they work with. So with us being a leader in the space, being able to reach about 200 million users, that gives us the ability to have that scale benefit, again, to be able to allow a bank to rely on us for the data and a fintech to rely on us for the data instead of having to do that work themselves.
Ryan, curious on why another capital raise instead of a SPAC debut, just given how hot the market has been, and is your business model profitable right now during the pandemic?
Yeah, so the core parts of our business have been profitable. We actually were profitable, as far back as almost 2 years. And so our ability to have the core parts of our business be profitable has been part of what's enabled us to be able to grow and scale in a stable way. When you look at going public, I mean, for us, whether it's through a SPAC, going public or raising a round of funding is all about how do we scale the business and be able to deliver for our customers in a more meaningful, powerful way. So our focus is not on the nature of what any kind of raise or going public or the method of going public. It's not on that at all. It's entirely on, with whatever capital does come into the business, what's the best way to bring that capital in for us to be able to use it to accelerate the product innovation and the scale of what we're doing with data.
Ryan, we got about 30 seconds left. I noticed on your release, Silicon Slopes, Utah, as the byline there. Tell us a little bit about what's happening out there, because we've talked to some companies who are based out there, and it does seem there's a lot of energy to bring tech centers outside of the Bay Area, and certainly, outside of Salt Lake, Wasatch area is kind of been a center of that as well.
Yeah, things are great out here at Silicon Slopes. There are some phenomenal brands and companies being rapidly built here. I think we just have a state that's very friendly to business, but also we take really good care of our people. We've got great weather, we've got wonderful seasons, clean air, and mountain biking in the summer, skiing in the winter. So I think that has generally led to a lot of companies thinking to relocate parts of their presence here. So we're having a lot of pressure from people coming out in the Bay Area and opening up offices, but there's such an incredible pool of talent here that the area is able to sustain it. We've been able to thrive here and really happy with being located in Utah.
And I've heard anecdotal reports that the snow this winter out west has just been phenomenal. I don't know if that's true or not down in your part of the country, but certainly it's been a little dry up here in the Northeast for those hitting the slopes. All right, Ryan Caldwell, CEO at MX. Ryan, really appreciate you taking the time this morning, and we'll be in touch.
Take care.
All right, a lot more coming up here on Yahoo Finance Live. We're back with more in just 2 minutes.
All right, boys. What's up, everybody? I'm back. Yo, everything
Netflix
looking
is
good
set
for
to
me
report
right now,
its numbers
y'all.
after the close of trading today.
Hold on, let's see what this lady talking
as
about.
always, the subscriber numbers. We talked to Bernie McTiernan last week, he's an analyst who covers the stock, who said we could see some attrition, some churn because of The Office leaving Netflix. Interesting thesis there. Dan Roberts is with us now. What are you watching for in those Netflix numbers, Dan?
Well, Julie, you mentioned The Office.
We don't need to hear what they say. Let me take a look at Netflix. NFLX. Oh yeah, I was in Netflix. When you see lines like this, that means I've been in the stock. But yeah, I was in Netflix. So damn, I don't think I was in during this time though. I wasn't back in this time. Damn, that's some free money right there. Well, anyways, guys, I'm back. Today is a good day for me. Adobe, still waiting on that one to pop. Sometimes that's what it does. If you get the best entry, it's going to shake up around this area a little bit and then shoot up. I mean, I don't see why it would shoot down. So this one's waiting patiently. AMC. Y'all know AMC, man. The movie theater. The movie theater. I'm up 19.74%, and that's only today. That's just today. Man, I'm so blessed right now, man. 2021 can only make you or break you, man. 2020 might have been a little shocking, a culture shock to a lot of us. But by now, we should know how to adjust to this by now. If we're just gonna stand around and wait for somebody to hand us some stimulus checks or whatever, then we ain't gonna get nowhere. Y'all gotta learn how to hustle, man. It's too much technology out here. Y'all can't be broke and blaming it on the president for not giving you $2,000. I mean, we figured it out already. 2020 is when it was time to figure out what's going on. 2021 is when you got to put to work, man. No excuses. It's free money, man. Like, think about it. Sitting home, waking up to this. Come on, man. You know, like, why work for somebody who ain't going to care about me? Like, if I go to work and tell them I'm sick, they ain't going to care. But if I tell the stock markets I'm sick, they still going to pay me. I mean, they might not care, but they still going to pay me. That's all I need them to do. The work going to tell you to clock off. This is just free money right here. See, like, I'm waiting on this one to do something. AMC, let's see. I'm gonna zoom in for you guys. I want y'all to see this for y'all own eyes. Like, all the stuff I'm showing you guys, if you was inside my trading group, I call these plays out, man. I call these plays out. Hold on. So in total, I'm up 27% on this trade right here. This AMC, y'all know the movie theater. Y'all know this one. I'm up 27.71%, man. Like, ain't no way. That's just, you know, y'all know what I call that, man. I got into this on Friday, by the way, guys. Friday's when I got into this. You know, like, I might not always know when these pop-ups about to happen. Now, I'll tell you right now, I don't know when they happen. The only thing I do is I get into a lot of plays, and then boom, something happens, at least to one of them. You really only need one. That's all you need. Like this one didn't pop yet. It's actually going down. It's cool because I already made all the money back right here, plus some. Like, think about it. This one's down 0.52%, and this one's up 27.1. Come on, man. It's free money right here, man. This one's going to keep going up, though. Let me see what we're looking at right here. This is the daily chart. I just got to wait it out a little bit. It'll go. Probably got to wait it out a little bit. I might buy some more if it come down to about, let's see, about here. I might not see it there, but be prepared for it anyway. See what Alibaba talking about. Alibaba, I'm up 14.92%, probably a little bit more than that. This one's I'm up 9.64%. This one I'm up 1.96. Facebook, I'm up 1.5. Like, that's all I need. Like, think about it. You work 8 hours a day, right? And let's say you guys make $15 an hour. I mean, I don't know. Some of you guys might make more than that, but you know, that's average. $15 an hour, right? And on average, that's $120 a day. That's 8 hours a day you wasting your life. You're wasting your time, your precious time, just to make $120. Now, that's not including the taxes and all of that stuff that you got to pay. What's up, Duncan? That's not including the taxes that you got to pay and all that stuff. So let's say you pay taxes off this, right? And you walk out with $90 just for working 8 hours worth of your time, man. When all you got to do is invest into a company, make some money, and that's it. That's it. Like, think about it. If you put, hold on, let me move this up just so you guys can get a better view. So let's say, so right now I'm gonna use this one stock. Now I'm in actually all these, the ones that's got the tabs on them. Those are the stocks that I'm in currently. So I'm gonna zoom in on this chart for you guys, so you guys can see what I'm talking about. I'm gonna do some math for you guys. Which I'm trying to get it right on there. All right, so I'm up 31.07%. So let's do some math, right? So let's say I put $1,000 into this stock, right? Oh man, hold on, I ended up changing it. So let's say I put $1,000 into this stock, right? Matter of fact, let's say I put my stimulus check into this stock, right? $1,000. Well, because you guys about to get another stimulus check, you know, when they sign it. When I don't know when it's coming, but we should be getting another one soon. So let's say I put $1,000 on this stock, right? And you make 31.07% of that. You see what I'm saying? That's crazy, man. That's 300 and I had to do the math, guys. I had to pull up my calculator. That's $310 right there, and $310.70. I ain't gotta wake up 7 o'clock. All right, no, wait. What time? I don't gotta wake up at 5:45 to brush my teeth. I don't gotta pack lunch. I don't gotta pack breakfast. I ain't gotta listen to no supervisor. I ain't gotta see them breathe down my neck and tell me what to do. Ask me what I'm doing every 5 seconds. I don't gotta turn in nothing on time. You see what I'm saying? That's it. And it don't even take you long to trade these stocks. That's why y'all gotta join my trading group. This is just this free game right here, man. And think about it. This is while the market is crashing. While we in a pandemic, while we got, people, I guess I'll just say it like that, people in quotation marks, that can say a single thing on Twitter to shake up the stock market. But still, there's ways to make money, man. Scare money don't make no money, man. I just want y'all to know that. You can't lose in the stock market. That's why you guys, so for some of you guys all see me or know me, that's why I'm always happy, man. You gotta learn how to make your money work for you. That's what I do. Oh, by the way, guys, that $310 that I was showing you guys, that's, like I said, that's one. Imagine so if you guys just came in, what I said was, if you spend $1,000 on this AMC stock, and you got up 31.07%, that's $310 right there, right? And that's only one stock that I have, and I have 1, 2, 3, 4. I have 6. You see what I'm saying? So, I mean, of course, that's my highest number, but even so, that's still more than what you're going to get at your job. So, if you work, think about it. I'm gonna show you guys like this. If you work 40 hours a week, because that's what most people work, and you get $15 an hour, right? That's $600. Of course, you got to pay your taxes and insurance and all that stuff. Not insurance, but yeah, medical insurance, whatever. So, but for the sake of easy math, we're gonna leave it at $600. This one trade made half of that. And guess what? I ain't had to wake up 5 days in a week. I ain't got to brush my teeth 5:45 in the morning. You see what I'm saying? I sleep and wake up when I feel like it, man. This is just, and that, like I said, that's only one trade, man. And I'm in 6. That goes for all these stocks, man. This one right here, Alibaba, I'm up 14.92%. Now, this one I've been in a little bit longer. Of course, I could have sold here and rebuy, but I didn't want to. I've been in this one for a little bit longer. You see what I'm, but Still free game. Still free game. Still free game. At the end of the day, you're gonna make more money in the stock markets than you'll win or make working a real job. So normally what I like to do is so if I find another opportunity, let me see. I'm gonna look at my chart and see if I can find something. I'm looking at something else on my other screen. See if I can find another stock that I might want to get in. RKT. I don't really know how this one's gonna do. This one look like it's actually this stock look like it's about to explode. Let me take a look at this one up close. I'm gonna take a look at this one up close. So normally what I like to do is I like to look at these stocks, right? And if of course I need to do some research on this. I don't even know anything about it. I'm just looking at the way the chart is the fundamentals of the stock. But thanks, brother. We're gonna study this stuff. Hey, it's good stuff, bro. I hope try to teach it, man. I have a trading group as well. It's a good way to make some money. But like I was saying, hold on. Let me check my messages real quick. Someone just sent me something. Showing me. Let me see. See something real quick. Oh man, I think I did it right. Hello? I might. Hold on, chat. 1 second, chat. I might have a guest speaker coming in, guys. Oh, this is it right here. I got a guest speaker coming in. Hello?
Yes.
I got a guest speaker. She's in the markets as well. She's been in Tesla before the split and still currently holding Tesla. I mean, really? She don't even need to look at no other stock at this point. And guess what, chat? As I was saying earlier, she don't gotta brush her teeth in the morning either for work. Tesla works for her. Hi. So, would you like to introduce yourself to the chat?
Okay. As you know me, I'm Kiki the Don, and I have been doing stocks and marketing for about 4 years, and so far I enjoy it. I really, really like investing. And if you new and have not tried investing yet, you should give it a try.
It's you can't lose, man. Let them know you can't lose. You just can't lose. So, are you looking at any other stocks, or are you satisfied for what you hold for right now?
You said, I'm sorry, what was your question?
Are you looking at getting into any other stocks, or are you satisfied with your current holdings right now?
I am satisfied with what I have right now, but I have been looking at other stocks like Chevron. Chevron has been on
Let's take a look at that.
radar for a while, so I'm trying to find a good entry into that. I also wanted to get back into Royal. Kind of got scared and sold Royal, although I sold it at a good price. I do kind of want to get back in, but I kind of, with COVID and going on, it just was hard to determine.
Let's see. Let's take a look at Chevron. What's the ticker symbol for that?
Chevron, I believe, is VX.
Oh no, that's CVX. Oh yeah. Okay, that's Chevron. Ooh, it's a good dividend play. Let's see what we have here. Yeah, Chevron's on the move right now. Chevron is on the move right now. Chevron's still on the move. You should see. Let's see. I'm drawing the chart out. You know how I do. I do what I do best. Speculate. Yeah. But you should see some pullback coming in soon, around $98 on Chevron, possibly $98. Also, probably anywhere between $98 to $102. You should see some pullback to that. And when it pulls back, you can load up around $83. And then, of course, buy the dips. But good dividend play. I like Chevron. I love Chevron. Unfortunately, I'm not currently holding it, but that's one of the best ones.
Yeah, I think I want to get into Chevron. I wished I really invest more into Disney.
Oh, man. Let's see. I was just looking at that one. Let's see what we have here. Disney. Ooh, Disney looks so good. Did you I know you was holding Disney at one point. Are you still holding it?
I'm still holding Disney. I wish I just got more.
That's how we always feel. Don't we always when you're winning, you always wish you had more. When you're losing, you wish you didn't got it. I mean, that's just part of the markets.
I mean, facts is facts.
You know, like, did you know, like, hold on, let me zoom in on this chart real quick. Like, I'm up 31% on AMC. I didn't expect that. I didn't, you know, I
Neo
just
was another one on my radar.
Neo,
N-I-O.
Oh, I had that one too. It's on my radar, but I gotta wait for a pullback, man. I just can't go in there hardcore. I mean, it just depends on how you trade. I mean, if you're an investor, Neo is the way to go. I mean, you know, Neo's the way to go if you're investing. If you're trying to trade, I gotta see a pullback on this. I got to. But the thing about Neo is, this past week they was talking about offering convertible notes for Neo. And for some of you guys who don't know what a convertible notes is basically, let's say you invested. I'm gonna make up a random number, of course. Actually, for this, the minimum you can invest is $1,000. But let's say you invest, let's say $1,000 into Neo. What happens is, so you got. You can give it to them for a year, 3 years, or 5 years. And what they do is you'll give them, let's say, $1,000. Let's say you give it to them for a year. And what they do is they'll give you interest on that. It's like a loan. That's what a convertible note is, or convertible bond. Some of you guys might say that. And they give you interest on the amount of money that they give you. And, of course, the interest rate is determined based off of the note that you're getting. So let's say they give you 5% of what you give them every year. So they'll give you a percent. I think it depends on the note. Some of them pay it every 3 months, some of them every 6 months or a year. And they'll give you interest on top of what you give them. And if you let them hold the money for, let's say, a year or so, they'll give you back your money along with a certain amount of shares. So let's say you bought $1,000 worth of Neo at a convertible bond, and you give it to them for 3 years. After 3 years, they'll give you around 100 shares. No matter what price it is, they'll give you 100 shares. So that's a good thing. And even to make it even better is if the market crashes and it goes to zero, what they do is they pay you first. They give you back all your money with the interest first. And then they'll pay back the shareholders. And when I say shareholders, I'm talking about the good ones at the top, not like maybe the institutional shareholders, not like the regular people like us. We're probably going to get zeroed out. So, yeah. So, I mean, bonds and notes is another good way to go. I'm thinking about doing that with Neo because they just offered I think it was $1.9 billion in convertible notes that they was trying to raise. So I wouldn't mind dropping a couple $1,000s on that. Of course, I would have to give it to them for the full term. You don't have to, but I would prefer to do that because Neo is like Tesla. So like, yes, I don't want to invest $20,000 into Tesla now because it's going to dump eventually. But in the convertible notes, it's a different story.
I agree. I've been looking at different ones like option as well, but I wanted to get more details about options. But I thought about using options for trade as well.
Options
just so many
is
things.
good. Options is real good. Think about options. I mean, I'll tell you right now, you make more money in options if you don't have that much of a capital. The only downside is, unlike stocks, you can wait it out. So let's say you buy a stock and it tanks. You can be like, well, it'll go up eventually. But with options, you don't really get that say so. So if you get an option for a month, because that's what you're doing really, you have a contract. And if your contract expires, you either have to take what you have at a loss or a gain, or extend your contract, which will cost, of course, more money. Yes, you do make more money, but your room for failure is like, a lot more than stocks. Because like with regular stocks, you can just hold it. And if it tanks, you can just be like, well, I'll hold it for a couple of months. It'll go up eventually. And about 3, 4, 5 months later, it'll actually go up and you're good. It's like nothing ever happened. But options, you can actually lose money. It's a good way. It's a good way to make some money. Don't get me wrong, but I don't like to have that feeling that what if I lose, and I have no answer for that.
Now, another stock that I was looking into that I couldn't believe is doing well. I could believe it's doing great because I enjoy the restaurant, but I just couldn't believe Chipotle.
Oh man, what's it? Chipotle.
Chipotle has blown my mind.
Oh man. Oh wow. I was remember when this one was like $800 and something.
Exactly.
Damn.
And it's double.
It's double.
I remember it was like 5 something, and I was like, no, ain't nobody buying that much Chipotle. I thought because I ate it, not everybody else ate it, but clearly the whole world is eating Chipotle right now.
Well, the thing about Chipotle is, don't get me wrong, Chipotle is good, but every restaurant is good. But why is Chipotle doing this unlike the other restaurants?
Right. Chipotle is doing numbers. Chipotle is like Tesla. They doing numbers.
Yeah, I don't understand. Like, you know what I mean? Like, KFC is good. Golden Corral's good. They're all good. They're all good. But how is this like my thing is, normally when restaurants, or any stock does good like this, there's a reason behind it. Like what am I missing here?
But one thing about Chipotle is about staying relevant. I noticed that is the key. Customer service in a business and being relevant is always the key. Like McDonald's is popular because you see it in every blog. You see the commercial, you hear about it. As long as their name stay relevant in the media or through celebrities or through influencers, they will survive. Chipotle is one of those. Like Shawn Mendes is like the best artist out here, and Ariana Grande. So people like them eating from them or being sponsored from them is always gonna stick out more than any other restaurant.
That's crazy, man. I didn't know Chipotle was like that. I mean, I never really paid attention, but I only paid attention to stocks that drop. But this one ain't never dropped.
It was like 500 or 600. They did. They were like 500 or 600.
Well, that's that's during the pandemic. Everything was there.
Right.
You know what I mean? Everything was that price.
No, this was before the pandemic. Now this was before the pandemic. Chipotle has never been over $1,000 till after the pandemic.
That's crazy, man.
So I don't know if they just have A1 delivery service that comes with this, but they always have been doing good. Like they always been seeing. It was always like 400 to 500, but I didn't buy them because I'm like, it was just like that. The media was trying to say everything about outside food of the United States. So if it wasn't American food or Chipotle food was not real Mexican food, it's a Mexican American food. So I just thought that they wasn't gonna do as good, and I was wrong. They proved me wrong. I wanted to buy them, but sometimes you hear through the media different things instead of doing research. That's why I'm a big fan of doing my own research instead of sometimes listening to the media.
Yeah. So that's the thing about the stock market. So I know the pandemic was the perfect time to learn this. The perfect time to learn this. And one thing I learned about these markets is believe none of what you hear and half of what you see. That's one thing I learned. No matter what they say about the cure, the market's still going to react to fundamentals. Nobody cares about news unless it's, big news. I mean, I guess, at one point people cared about news, and then, some people start to understand that there are certain people in the world that says random things at random times that doesn't really mean anything, or couldn't be true, or could be a lie. So you got people that, understands that things aren't always true. And then you got people that always, I guess I should say the word, get brainwashed. So right. I'm not going to say any names or point any fingers, but some people just get brainwashed. And, I want to say at least 95% of people who are investors, or, at least good investors, have brains. I'm not saying they all do, and I'm not saying they all don't, but people with brains, we don't get brainwashed.
And I think most investors have their own opinion. That's the thing, because, for example, Tesla, where I'm located at, we don't even have the charge a Tesla. So no one's looking for a Tesla over here. They're looking for a Ford, a BMW, cars like that, nice cars. They're not looking at a Tesla because there's no way to charge a Tesla. So some people might not buy it because they're like, no one knows what they heard of Tesla, but it's not around here. You have to go 2 hours out to recharge your car. So a lot of people are not going to invest in it, thinking that, because it's not here, everybody else is not going to get it. But that's not the case. Yeah. That's why I always say, do your research first. Just because I live in the country, and there's trees around me and it's barely a gas station here, don't mean that Tesla wasn't going to strive. But when I did the research on Tesla, and I'm like, there is something about Tesla that people see, and the more research I see, the more cars that they sell, and I see what makes them different from everyone else. That's how I do my investment. Same with Disney. The parks were closing down, and I still invest in Disney because I'm like, okay, I'm gonna take this chance. Disney look like they're gonna focus more on their TV and media side, so I'm gonna go ahead and invest into Disney, because once they open up this park, they about to shoot up.
Yeah.
Because the money they making now is just because we watching them. We not even at the rides. We're not checking in the Disney hotels. We're not checking in at no park. We're going to buy Disney streams.
Yeah.
So once I saw that, and they bought Hulu, now when they bought ESPN, I said, okay, Disney making money moves.
Yeah.
So let me move with them. So that's the chance I took. But at the time, I invested into them, but you always get scared because of the COVID. But I'm glad I did it.
Yeah. No, that's a power move right there, man. That's a power move right there. So let's see. Let's let the chat know what's up, man. You remember what price you got in Disney?
It was like $90.
Oh, yep, 99. I got it right here because I remember, because I was in Disney too, but I sold it. So chat, I want you guys to know, she currently holds Disney right now, right? And she is up 72.32%. Why it work? Like, you know what I mean? Like, I hate to say it, but this is most of y'all's salary right here. Less than that. You see what I'm saying? And I thought Disney paid dividends. They took it off?
They took it off. They did, but they took it off. A lot of stocks that I have
did. They took it off, yeah. So before the pandemic, obviously, Disney paid dividends, but they're currently not paying dividends. But when they come back to paying dividends, like I said, why work? Why work?
I encourage you to work because you need the money to invest just in case of rainy day. But once you get that house paid off and that land paid off and those cars that you really, really want paid off, then I can understand you can cut back to part-time and maybe retire early. But yeah.
That's more like it. But basically I'm saying, don't focus too hard on something that's not going to focus on you. You know what I mean? Because, like, no matter how hard you work, somebody else is going to try to take the credit for it.
Now, another company that they were talking about was Goldman Sachs.
That's GS, right?
Goldman's.
Yep. I'm listening. GS.
Okay. Oh, yeah. Goldman Sachs I was watching because I knew that when Apple's another one I'm iffy about, but I kind of like. Goldman Sachs, it has teamed up with Apple. So in order for you to get an Apple Pay card, you have to go through Goldman Sachs. So that's why I wanted to invest into Goldman Sachs. But I didn't because of the pandemic. The pandemic had me so scared. I was like, I don't know if I want to take this chance or not. And that was back in when Goldman Sachs was like $140, $150. But now they done double. I'm like, man, I should have just buy one share and I watch that grow. But I was just, that's why I always tell people, don't go by what you see on TV. You just want to do your research to make sure. Because a lot of stuff that you see on TV can be facts, but a lot of times it be opinions as well because they don't know who's going to go up and who's going to go down. The only person I know that got that kind of move is Martha Stewart, and yeah, I know what happened to her.
What's up, Wack? Skeeter, is this your job? What's up, man? I got multiple streams of income, but this is my main stream of income currently. It's fun to do. It's exciting. Thanks for stopping by the stream, by the way. Please don't forget to press the like button, give it a thumbs up, subscribe if you haven't already, and let us know where you're watching me from. Also, I have a guest speaker in the house, Kiki the Don. She's letting us know about her stock trading experience.
Yes.
Okay. So there's a lot of other companies that I'm going to keep you in a loop on. Yes, Flooper's alt account. Yeah, so there's a lot of other companies that I'm going to keep you in a loop on. They're even better. See, you gotta learn how to hit it from different angles, man. Like from Dota. What's up, man? Oh yeah. I remember now from Dota. Yeah. I remember now, bro. Yeah. So there's other companies that I'm gonna keep you in a loop on to invest into, bro. Or Kiki, and we hitting it from a different angle here. I'm keeping a loop. So what's going to happen is, of course, everyone, EV is becoming the next big thing in this next generation, I guess, that we're about to come into. So instead of investing, well, I'm not going to say instead of, because you still want to put your eggs in multiple baskets. But the things that I've been looking at, as you can see on my list, isn't just Tesla and NIO, but also the batteries that they use. You see what I'm saying? So, and ways of how they do different things. And that's stuff that I've been looking into and how batteries and stuff is created. So, I'm still doing my research. There's new companies out there. I mean, yes, they're new, but it's worth it. Sometimes it's worth it because, yes, I invest a lot of money into, name brand stocks, but not name brand stocks. You invest a little bit or at least enough that you're willing to lose because when it pops, it pops. A good example of that is AMC. I know everybody knows AMC, but people would still be scared to invest into it because we still don't know. To this day, we still don't know when the movie's still going to open up. We don't know that yet. We keep saying after the virus, but the thing is, we thought after the virus was going to be last summer.
Me too.
I thought we was going to be good, but that didn't work out. But what I did was I invested a little bit of money in here, and I'm up over 31%. Damn, this stock right here I had on my list. I had this stock on my list right here, and it's up 56%. And that's just today. Damn. Gotta love it, man.
Now, those EV stocks are not easy because I'm glad I didn't invest into them, but I wanted to really, really bad. It was a stock called Nikola, NKLA.
I was in that one.
Nikola.
I got in that one. Yep. I remember that one too. That thing tanked.
Yeah. And I really had faith into it. Then all this stuff stopped coming out. Man.
Yeah, what happened was they were supposed to partner with somebody and they cancel the deal or something like that, right?
Yeah,
Yeah.
but I think he had a lawsuit as well.
I don't know. I already made my money. I was out by then.
He did. I think he did a lawsuit. It was a big thing around 2018 where he sued Tesla. It was about those 18-wheelers, semi trucks. It's supposed to have the
Oh
EV
yeah, that's what I'm.
designs, and it was supposed to be copyright infringement on the design of it. And I guess they settled in court. I couldn't remember if it was thrown out or settled, but it was like a $2 billion lawsuit about it. And then an issue happened with the CEO, and next thing I know, stocks were way down. And I was like, no, I ain't gonna get, not gonna
Yeah,
get into
you
that.
gotta get up out of there. Yeah, I
Yeah,
remember
because
that.
once
I
you go
remember
from
that.
$100 to $10, oh, I'm good. I need to, now it's different when you do it during the pandemic because we know the pandemic caused it.
Yeah.
I know it caused that. But when it's something over lawsuits and claims and all this, I can't do mix up
I got
because
you.
I'm too afraid. That's
Hey.
why I couldn't do Pfizer. Pfizer was another reason because it was a good start to get in, but then he had all these different claims going on and issues, and I'm like, okay, if I'm a real gambler, I would have took a chance in Pfizer, but I guess I'm a part-time gambler. We're taking the chances.
Yeah, I got lucky, man. I did get into Pfizer at $29 and I sold it at $40. So I was blessed to see that play. And then I also got into Nikola at $16 and sold it at $18 when I saw that thing. Because there was a point that Nikola didn't move at all. And I was like, man, let me just go ahead and take these $18.
And run for your country.
Now, so not only the batteries that I want to keep informed on, but another thing that you got to keep your ears open for is you're going to like this one. Twitter. Yes, I said the word Twitter. Why? Because at its current price right now at $45.03, if you buy this and take it back to this all-time highs, that's 24.87%. Well, it's not that all-time highs, by the way. The all-time high was 70-something dollars, $75. So if you buy it right now and take it back to its current high before it dropped, that's 24%. And of course, the only reason why it dropped is because you got a lot of Trump supporters that got out this stock. I want to invest into this stock, but I only want to get in. I mean, I got in earlier today and I sold it. I did a little day trade with it, but I don't know, man. Like I think I need to see this come down a little bit more. I think I need to see this come down to at least $42, because that's a good come up.
Now, for me, I think Hertz is the one that beat me down the most. Me and Hertz, we don't see eye to eye right now.
Ouch, that hurts.
Yeah. We beefing right now. Hertz is just like they want a divorce from me. They're not really feeling me. But I got faith in Hertz. I really do got faith and hope to see Hertz come back up. But right now, if I could go back, I don't think I would have sold it early than holding it.
Or you could have just listened to me.
That too.
It's okay. You know why? Because we made it back already. So a lot of us took some L's one way or another. But the thing is, we win more than we lose. So think about it. If you lose 10%, you know what I mean? But you make 40%, it's like nothing ever happened.
But like I say, that's not always the case, because then I have a colleague of mine that invested it into Hertz, right? And they're winning right now because they got in a little earlier and they sold and got right back in. So a lot of times is when you press that button.
That's what so that's the biggest thing about trading, guys. When you set these lines up, like as you can see, I got these lines set up. I take my time and I eye these lines up. I zoom in. I start off with the monthly chart. Then I zoom in on the weekly, then the daily. Then I zoom in. And what I do is I set a limit order. And that's how I buy stocks. I don't do market order. I do limit. Unless it passes my line. If it passes my line, then I do a market order. But I can tell you right now, this Twitter right here, I am going to get in on this one. This one is just so juicy. So if Twitter hits my mark of $42, that means I'd make, and it goes back to its all-time high, that's 31.66%. So for you guys that's new in trading, if you, of course, have your bank or Robinhood or whatever you use that have margin, the good thing about margin is, so for example, if I spend $100 on a stock, I'm just making up a random number, you have their margin rate is like, well, it depends on your bank, but normally it's like around 5%, right? But you would divide that by 365 days because it's 5% over a year worth of time. So I'm gonna pull up the chart, pull up my calculator. So that means that you would only have to pay, let's see. So that means, so if you borrow $100 from your bank to make a trade, you'd have to pay back $5 only if you hold that trade for a year. But if you hold it for less than a year, you would pay back 0.0136% cents a day. So for every day, you have to pay 0.013 cents. Tell me, it's worth getting a margin account. So if a good opportunity comes and you feel like it's going to go up, use that margin. Just use that margin. Like, think about it. AMC, if I use margin here and it's up 31%, if I held this trade for a year, then I'm only paying back, I'm getting 25%. That's not bad. That's still not bad. But guess what, chat? I've only been in this trade for like 3 days. So it's ways to make money out here in these streets.
You're right. And if you don't have an investment account, Skeeter Season TV has that link for Robinhood that you can go ahead and get into. You use your stimulus check, and he's giving you what to invest in. He's telling you how to do it. I'm doing mine right now. I'm about to turn my 600 to 900 real quick in about a week.
That's right. That's right. We're gonna stay close to Twitter. I mean, I really like, to be honest with you, I feel like Twitter is in a good buy spot right now because it gapped down. But I don't know, man. I still can't see it coming down to $42. So sometimes you gotta wait to play up. Why do you use Robinhood? Well, the reason why I use Robinhood, I mean, I got more than one account, by the way. So I have Merrill Edge or Merrill Lynch. That's my main. And then I have Robinhood. And the reason why is because sometimes your bank doesn't allow you to trade certain stocks. So you use Robinhood to do that. You know what I mean? And I use Robinhood for my gambling stocks, which I know if you want to know what I mean by that, AMC was a gamble. Like these other stocks, I spent a lot of money in these other stocks because their name brand businesses. They got a good market cap, which means the amount of money that the business have. Like, look at this right here. AMC obviously, like I said, it only went up 23%, and that's today. So, and right now they have $319 million. And that's only because they went up. Really, they was way lower than that. And look at companies like Facebook with $723 billion. You see what I'm saying? Like these companies right here that I invest in, their market caps are in their billions. And if you look at the bottom right of the screen where I'm pointing my mouse at, that shows you the market cap. You see what I'm saying? So Adobe, everybody uses Adobe, so I'm in that one. Why not? You know. But when I make gambles like this, because like this was a gamble for me, because like I said, no one knows when a movie theater is going to open up. I just know fundamentally this was good, based off of fundamentals of just looking at lines in the chart without looking at news. Because what I normally do is I look at news, or I look at the fundamentals of the chart, and then I look at news, and then that helps me determine. But I was like, you know what? I'm gonna go in this one, and I put this one in my Robinhood account so that way I don't look at it every day, because my Merrill Lynch account, that's the one I look at every day. And if I see it going down, I'm like, oh man, it's going down, it's crashing. I'm gonna get scared, you know. But Robinhood, I don't look at every day, you know. But all of a sudden, it just shoots up like this. It's like, oh, okay, now I want to look at it every day. So that's just that. But I mean, I have a referral link also that I can post in the chat if you want to get into Robinhood, and if you sign up using my referral link, you'll get 2 free stocks.
Now that's a game cheater. You get 2 free stocks plus you add your stimulus check. Somebody on vacation next year when the pandemic over.
Robinhood, baby. Yeah, so I mean, once you get into a play, hold on, I'm gonna send you my referral link. 1 second. I took a class last year. I want to try and test my knowledge. Yo, I mean, I'm about to. I stream this. I don't stream it every day like I used to, but I will start back streaming it every day. One second. Let me post this in the chat for you. So if you sign up using that, you'll get your free stock, which is good. And you know, the thing about it is, I know you might not believe me if I tell you this. Let me see if I can pull it up. Hold on. I can't pull it up. But the free stock that they gave me was GameStop. I sold it already though. But GameStop was the free stock that they gave me. And look at this. Look at this. Look at this. Hold on, that's not it. That's the wrong one. GameStop was a free stock that they see. As you can see right here, this is when I had GameStop back here, but I sold it. When this happened, I sold it. But look, so it's not bad. It went from when I had it was at $3.60 to $45. So I mean, it's good. It's good. It's good. I mean, it's exciting, man. I know you guys see people in the chat always be like, when do you ever go to work? Every time I look, you always playing Dota. Now y'all see why. So, Kiki the Don, you know how we got to do it, right? Kiki the Don, you there?
Yes.
You know how we got to do it, right?
Yes.
We got to load up on some cruise line stocks so we can be shareholders before we go on a cruise, like last time.
And you know the perks about that?
Let us know.
So I'm telling you right now, if you decide to go on a cruise, and all this vary from cruise to cruise, depending on which cruise line that you invest in. But you say, for example, you guys decided to buy, let's say, 100 shares into Royal Caribbean. The perks that you would get with that will be, depending on how much days you go, you get up to $100 onboard credit. So you can use that to gamble with, to buy drinks with, get a massage with, whatever you want to do on the cruise. That is your onboard money to spend on the cruise, on top of any other perks that comes with the cruise. So every time you cruise, you would get that perk of being an investor.
So for some of you, with that being said, guys, when the pandemic first happened, I got into Carnival at $9 and I sold it at 18. It shot up to 21, but I didn't know how far I was gonna go. But I sold it at 18. Still doubled my money, and that was back last year. And I used that money to get back in, and I kept rolling that money, that same money.
So that is a good perk though, but you get up to $250 just for being an investor. I mean, I'm buying everything. I'm doing everything with that. That makes me invest more.
It does. Like I really want to get in, but it shot up on me, so I gotta wait for a pullback.
That one I was looking at in Carnival. Oh, Carnival, they have the perks as well. That's one thing I like about them. That comes with that, and then they have dividends. You can't beat that.
Yeah. So this one, like the stocks I got right now, all these stocks I've been in. Well, Facebook, AMC, and Adobe I've been in since Friday. This one right here, I've been in this one. DLR. How long have I been in this one? I've been in this one for a bit. I've been in this one for maybe a couple weeks. It didn't really do too much. And it came up, then it came back down. I don't know why. Oh, it's probably because of the ride and stuff like that. This one's slowly getting there. So some of these stocks like this, what I like to do is if I see an opportunity, let's say, for example, Twitter. Let's say Twitter comes down to where I want it to come down to. I sell these slow-moving stocks like these two.
Look at Roku. On the bottom right-hand corner of your streaming, Roku is up there, 435.
Let's take a look.
Wow, they doing good
I wasn't
today.
Chad. I was in Roku. You can see my entry right here. That's crazy, man.
Wow.
And I got out. You see, it went up. I sold it, and then I look at it. Damn, they got me, man. I got in Roku at $99, y'all, and now it's $434. I sold it. Damn, I could have been good, man.
That caught my eye.
Jeez.
It's
all good, chat.
You got in at 99, and how much you sold it for?
Hold on, let me pull it back up. $120. I mean, that's still not bad, you know. You can't catch everything. I mean, that's just the golden rule. You sometimes just gotta learn how to accept it because it ain't always gonna work like that. By the way, chat. So
yeah, you never know. Sometimes you miss the boat.
Sometimes you just gotta give it up, you know. So what I'm gonna do,
but something is better than nothing. Yeah, that's what you gotta look at.
Like going from $90 to $120, that still really is good. That's good. That's $30 come up right there. But you know, it is what it is.
Yeah, because it's better than just letting it sit in your account and do nothing.
Slowly waiting on this thing to come down. I don't know if it will though. Let me see. What RSI at?
Oh, I wish I had Roku now. I wish I listened when you said it on your last stream.
Let's see.
Right? Like you said, you win some, lose some.
You can't win them all. You can't win them all, man. See, the thing about, I was about to say Twizzler. Twitter is it's right on my line. Like I marked the line for Twitter and it's right on it. And I really, 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 really want to buy this because that pullback is so healthy. And the thing about it is I bought this at $44.90 and I sold it at $45. And now it's $45.12. Oh man, like I really want to buy this so bad. Like according to the weekly, it just looks really good. Like it's right on my line on the weekly. Let me check the monthly. I don't know. I might. You know what I might do? I'm gonna wait till it go down. I'm just gonna wait. Sometimes that's what you gotta do. Learn to be patient.
Mm-hmm.
But it's right on my line. That's the thing. But it's okay. Let's see what we have. Oh man, SRPT. That was another good one. I should have gotten to that one. I should have used my margin on that one. Damn, I should have used my margin on that one. That one, so the company had like a failed medical test of some sort. I don't know, maybe some heart surgery or something crazy like that. And the stock dropped, but it was an overreaction. It's always an overreaction. Let's see. It was an overreaction. And what happened was, I would have gotten about right here. It was an overreaction, and it went down to $82, and now it's 93. And this is gonna come all the way back up. It's gonna snap back up like a rubber band. That's what's gonna happen. And I'm gonna sit here and cry every single day, wipe my tears, knowing I missed this.
What about speaking of therapeutic stocks, what about ACRS? You heard about that one?
CRS?
Yeah, ACRS.
Like HC, like Hotel Charlie Romeo Sierra?
Apple Charlie Romeo Sierra.
Okay. Therapeutics. All right, let's see. Oh, it gapped up. I don't know you're gonna buy gap ups unless you're trying to go to heaven.
Have you heard about that stock? No.
No, I never heard about this stock. No.
A, not H.
Oh, A, like Alpha Charlie
As in
Romeo.
Apple.
Yeah, Alpha
Yeah.
Charlie Romeo Sierra. Yeah. What's up, Warren? Hey, Skeet, you using Webull? I don't have a Webull account. But I was thinking about making one. I'm currently, I use my bank and I use Robinhood, but I was thinking, well, I do have Thinkorswim, but I don't have any thing in my Thinkorswim account. I was thinking about getting Webull though. Do you have Webull? I could use Webull, get the free stocks, and just trade it.
AMC doing real good today.
AMC is on the money today. I got lucky on that one. See, I didn't, like I said, I didn't put that much money into this one because, I don't know what's supposed to happen. And the way I thought of it was, if you made it to 2021, then you shouldn't go bankrupt. I can be wrong, but you gotta take all that. You gotta think about that. I use Robinhood too. I'm thinking to make Webull soon. Yeah, Webull's good because you got pre-market hours and you get more free stocks than Robinhood. But at the time, I didn't know Webull at the time. I didn't know what Webull was at the time. But chat. So the thing about AMC is, like I said to I think Whack, when you were in the chat and you was asking me about Robinhood. If I leave AMC in here, and let's say it goes back up to where it was before. Let me pull up my thing right here. So I got it on this yellow line. So let's say it goes back up to where it was before it dropped. I ain't even gonna go all the way up. I'm just gonna go right here. That means, oh man, I hate when that happens. So basically, if this goes all the way back up to where it was before it dropped, I'd be up 1,438%. That's crazy. And guess what? Normally, when stocks make a overreaction in a certain direction, it normally comes back and make the overreaction back in the other direction. So it can even shoot past this. But we're gonna leave it right here. That's normally what happens. That's why I bought this. Like, look. Alibaba, right? it made an overreaction. Boom. I bought in. It's going to come back up. And guess what? It's going to be an overreaction coming back up. But guess what? Again, Baba just announced that they about to start working on electric vehicles. I'm keeping this one. I'm holding on to this one for dear life. Electric vehicles. Like until they tell me that we don't need electricity no more, I'm keeping this stuff. Until they tell me we don't need electricity no more, I'm keeping this stuff right here. Unless I start to see a sign of a pullback.
I agree. I wanted to get into Baba too, so that's been on my radar as well. I was afraid a little bit because they was looking for the CEO for Baba.
Jack Ma.
But
Jack Ma.
Jack Ma. So I'm like, where's Jack Ma? He over there chilling. I'm like, oh, had me afraid for a minute. But he's doing good. He's wealthy. He's like Tesla. They shake up the market. They make noise.
Yeah, but
so I really want Baba.
Nah, I love me some Baba, man. I don't care what nobody say about Wuhan. Baba is where it's at.
Who's Wuhan? Never
China.
mind.
That's Because honestly, I think China is much, a better economy than we do. I mean, some people might disagree with me when I say that, but man, if you look at videos on like Tokyo and Japan, stuff like that, man, you'd be like, damn, why we don't got that? And if we got it, it's in like one place in the States, like in a museum or something crazy like that, where like they got some stuff going on over there, technology or inventions of some sort. China is where it's at, and I really want to go to China, but now ain't the time, unfortunately.
Right. Maybe next year.
Yeah, I had a friend that was stationed at Okinawa, Japan, and I want to go there because that's before the virus, he's stationed at Okinawa. Well, I think he actually moved back to Mississippi, but he was stationed at Okinawa, and I was gonna go up there and visit him because he was showing me that they had a Mario Kart track there. A Mario Kart track. I was hyped, man. I was like, yo, this is cool. But yeah, it happens. I still want to buy this Twitter. Even though it did this, I still want to buy it. I'm about to read up on Twitter. I might buy it.
Biotech stocks are up today.
Do some research on Twitter. Like I just want to buy it, man. Like yes, it dropped. I get it, but I just feel like right now
they're gonna bounce back though.
Yeah, but
That's what I think about Twitter.
you know me, man. I love the perfect entry.
Restaurants, okay.
I love the perfect entry. That's just how I roll, man. Let me see if I can find out. See if I can. I'm gonna see what people are saying about Twitter. Let me look it up.
S&P is up. Everything is up.
I think I'm about to buy this, man. Why wait? Where is that right now? 45.06. I'm gonna wait. I'm gonna wait for a couple. I'm gonna wait till it come down just a little bit more, and I'm buying this. Dang, I should have just kept that entry at I'm gonna wait. I'm gonna buy this. I'm buying this. I'm just gonna wait a little bit longer, and I'm gonna buy this. Cause the thing about it, the reason why I want to buy this is because it gapped down and then it kept coming down. It's not like it's coming down. You don't know where it's gonna stop. The gap kind of gave you a heads up. Like, yes, I want to buy at 42. So I think I'm going to load up right here, and I'm probably going to load up again at 42. Because that is a strong rejection right there. But I'm going to give it some time. I'm going to set my alert on this, actually.
Yeah.
Set my alert right here. Like, I want to load up on this thing. You just don't know. Gotta enjoy the stock markets, man. Let's see what we got. All right. So, Kiki the Donna, it was nice having you in the chat. Hopefully you come back and share with us your knowledge. Of course, I'm going to keep you up to date with current stock news and information, and keep you informed on what's going on in the economy.
Yeah, next time you just let me know, and I'll come back and chat it up with you.
Yes, ma'am. I appreciate it. Anything else you want to say to the chat before you go?
Nope, but just don't forget to like and subscribe to this channel for Ski to Season TV, and I'm out.
Thank you. I appreciate it. Have a good one.
You're welcome. Bye.
Hopefully you guys enjoy the show. If you got any questions, please feel free to drop a comment down below. Also, don't forget to follow me on Facebook, YouTube, and Twitch, Ski to Season TV. I'm always here. You can feel free to send me an inbox, send me a message. This is what I do right here, man. I do this for fun. It's exciting. So, see you guys later.